Hey everybody, it's Jack Carter with Jack Carter Trading, and I want to give you an update on the broad market and a couple of individual things in the market that I want to point out. So first of all, if you don't know the condition of the market, what I like to do is type in ticker SPY and look at that in a 6-month time frame. To me, that gives you the best view. I'm using TrendPoint Software. I'm getting color-coded bars, and the trend point indicators are in green, blue, and red. So you just click on chart and you see where we are in the last 6 months. Now the market is bullish. The S&P 500 is above all three trend points, the short term, the intermediate term, and the long-term trend point. We got a long-term trend point that's at a real nice angle. Beautiful. That is sustainable. That's not too volatile. That's not too unsustainable or parabolic. So that looks good. Second thing I like to do is check out DIA. That's the Dow 30. Much narrower index, but it's good to see where this aligns with the bigger S&P 500. It's also bullish. And then for the third piece, I look at QQQ, tech heavy. That's also above all three trend points. It's bullish. It's not at a new high, though. Look at this here. See, this one, even though it's bullish, it's not at the high that the Dow is. Just hit a new 52-week high right here. And it's not as bullish as the S&P 500 is. We see. That's much more bullish with a new high also. We've got a lot of stocks on this new high list. That trend right there in AFL just looks great. That looks like it's going higher. Now, Bob, here's the thing with these Chinese stocks. This is not going to stay up. Good news, this is something you might want to write down because you want to remember this. Good news, it can make a stock go up, but it cannot make a stock stay up. So whenever you have gaps in the price here, that's going to get filled in somewhere in the future down the road. It's going to trade at prices in between where there's a gap in the pricing. That will get filled in. Here's another example of how news must have shot this thing up. And it doesn't hold. The other thing about this in any stock is if you get an abnormal profit, as you can see relative to the last 6 months, this is an abnormal move right here. Whenever you get that, that's your sell signal, okay? That's it. That's as big of a jump as you could ever hope to get in that time frame. Boot looks like it's going higher, cake. Look at the volatility. Volatility measured by intraday bar length. That's a great volatile stock if you like day trading. Great chart. Great. It's got a lot of really good ones. Look at all the bullishness here. eBay, looking good. FTNT, we talk about this one. Home Depot, what does that mean for the retailer? Intuitive Surgical. Interactive Brokers, what's that tell you about trading volumes going up? Lockheed Martin, what a jump today. News going on there. Meta, making a new high. Southern Company, that's a utility. That's a nice chart. How much growth can a utility company have? Well, we're about to find out. Here's the utility ETF. That looks like it's in a great chart too. So that's it. Anything that's abnormally jumped up, sell it. Anything that's had a 4 or 5 day run abnormally high, consider selling that. Also, consider raising your stop loss on anything you have out there in the market right now. Put that stop about, I like it 7% below current market price. And if you put another order out there, let's say you're trading XLU and you buy it at the market, you're going to want to put a stop 7% below. You want to keep it below this short-term trend point. Otherwise, you're going to get stopped out within the normal trading range of the stock. Then if you want to put another sell order up higher, 10% or more higher, you can do that. And whichever order gets first, that'll cancel the other order out. It's called a one cancels other, or OCO. And it's a great way to use an exit strategy. All right, that's your market update. Stay tuned.